Hello traders, Gary Wagner here. It is 12:10 in Honolulu, 6:10 in New York on Monday, first day of August 2022, and this is the Daily Report for gold and silver. Today we witnessed a continuation of higher pricing across the board in the precious metals as well as U.S. dollar weakness. Gold, basis the most active December contract, gained $7.50 and is currently at $1,789.30. That's a net gain of 0.42%. Another interesting thing to note is a comparison between December gold and spot gold, because there was such a huge differential when August came to first notice day last week. It was up around $40. Now we're looking at spot gold at 71. And when we compare that to gold at 89, you can see that that has shrunk almost in half. There's still a pretty wide spread, but that's because there is so much time left between August and December. The dollar itself lost 0.46% and is currently fixed at 105.275. And lastly, silver gained about 0.7%, with an ounce of September silver currently fixed at $20.33.5. This first chart we are looking at is the continuous contract of gold futures, now representing the December contract. As we talked about a little bit, that is why we have this gap that is right here. It's the differential as August became December. There's a couple of things that we have to talk about. The first thing is, while unquestionably a pivot or key reversal would look precisely as it has right now in terms of a setup, on a technical basis, we cannot confirm that until one key component is met, and that is that we have a higher high than the previous high. While we have had a series of lower lows, and this last one certainly meets that criteria, each of these lower lows have been met by lower highs. And that's something that has to change to have technical confirmation that the market has changed from bearish sentiment to bullish sentiment. The high that I'm going to compare it against is this high that came in mid-June, and it came in at approximately 1875. So until we actually see the market break above that, we don't have technical confirmation that we have actually had that key pivot or reversal. However, I do believe that there is the real opportunity for that to happen, because as I talked about at the end of last week, what we are witnessing, I believe, is the fact that market participants are beginning to focus upon spiraling inflation rather than rising interest rates. And one of the reasons that that is occurring is we got a little bit of rhetoric from the Federal Reserve that kind of alluded to possibly softening the extensively hawkish tone they have had. Traders, as you know, we pulled sizable profits on our last trade last week and are looking for a point to re-enter. Right now, we want to see how gold reacts at a couple of specific areas. The one thing that I believe could provide some resistance on a technical basis is this long-standing resistance line simply created from the series of lower highs. That being said, we're pretty much right up against that, and it will be interesting to see if gold can trade and break above that price point. If in fact that does happen, we would put our first level of resistance at approximately $1,831. That would be major resistance, with minor resistance coming in right at $1,800 per ounce. As I spoke about last week, we have seen silver reignite once again. Take a look at this weekly candlestick that came in last week. Today we had small gains, but we're back above $20. We will look to incorporate silver in our next set of trades. Currently, we have our first level of minor support coming in at $18.70. That's based upon the 61.8% Fibonacci retracement. And the first level of resistance comes in at $21, and that's the 50% retracement level. This is a long retracement set beginning at the lows at about $11.50 up to $30 per ounce. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.